How do you think the tech startup community in New York and in Silicon Valley is going to be affected by this crisis in Wall Street?
I think that we're just going to have people are going to be more conservative. Everybody's just going to think harder before writing a check about anything. There are times when people want to take risk, and there's times when people don't want to take risk. Clearly, no one's going to want to take risk right now. So, I think it'll be harder to raise money. It's not going to be impossible. Good ideas will still get funded, but it won't be quite. People won't be quite as free with their investments, and people will take more time, make sure they really want to do something, and it'll just be harder to raise money.
How is the web world different from a decade ago when we had the dot-com rise and fall?
I think burn rates are way, way lower. Burn rate is the difference between the amount of money you're bringing in and the amount of money you're spending. Some companies don't have any money coming in, so it's just the amount of money they're spending. Most companies back then had $1 million a month burn rates. I mean, it was crazy how much money they were spending. Today, we have companies in our portfolio that are spending $50,000, $60,000, $70,000 a month, and that's a much more reasonable amount of money to be burning through. I mean, you would only need $600,000 or $700,000 to go the whole year, and in this environment, that's just a much healthier place to be.
Obviously, there's a huge crisis on Wall Street, economic troubles. How is that affecting your business?
Well, the good thing is that entertainment does well in a recession, so hopefully we'll be okay. I don't know, we've always been very, very cost conscious as a company. When we started, we were literally working in our bedrooms, and then we really survived for a year and a half without any financing. We got a small little angel investment in January of 2006. But we continued to run the company based on all the ad revenues and money that we were bringing in. So, I mean, I don't know, we just basically try not to overhire, try not to reach too far too fast, and then, maybe at some point raise more money or get revenues up.
Yeah, and it's January 07, so that was our angel investment.
Sorry.
And I mean, the other things we're doing is we're working with media partners, so we have a deal with CBS where we're going to work with them on a television show, and we will be doing the online component, building that into the narrative of the TV show. So, some of the, building our own IP library, doing our own things, which, add longer term value to the company, but then also some things right now that can generate revenue for the company and tie us over in these next year and a half, which is going to be interesting for everyone.
Exactly. Maybe we live in interesting times.
Yeah.
What do you think the economic conditions are going to have in terms of an impact on your business and also on your ability to raise capital?
Yeah. Good question. Historically, sales and marketing applications like ours are helped by a tough economy. So if you look at things like Salesforce.com, their best years were 02, 03, 04, right? Because everybody focuses on things are going to be tough. How do I help my top line, right, continues to stay healthy when customers are not as likely to buy, right? Who do I talk to? So it's helped us, and we had this quarter is the best quarter by far we've had today. The next quarter looks very healthy as well. From a fundraising perspective, I think it's challenging. I think it is going to be challenging, right? Companies that are in financial market are, keeping their heads down. But when you have kind of a breakaway technology, something that's completely new that addresses such a large market, 15 million sales and marketing people, and then what we do goes beyond sales and marketing because many other people in a business environment need to know about their customers. The funding will be there for a company like us. So it just VCs will just think more carefully before making an investment.
And maybe put you through more due diligence?
More due diligence and probably be more aggressive on terms, and that's usually what happens in this environment. But my previous company, we went public in 2000, but also we lived through 2001, 2, 3, 4, and we made it alive on the other end and sold the company to Convergys. So I'm familiar with what happens in when the economy gets tougher. And frankly, I think it's sometimes the best opportunity because the weak companies get,
weeded out.
Exactly, and the strong companies are the ones that make it. And for a healthy market, you do need these times where the good companies break away from the not as compelling companies.
Are you feeling an impact
Stupid
on your
economy.
business? You're funny. Anyway,
so, yeah.
The economy.
The answer to your question.
Are you worried? Is it going to be harder to raise money?
Well, it's definitely an issue. I mean, one of the things that we're in the middle of right now is, we built out our product, and as you can see, we're starting to build out our revenue streams. We're starting to build out our revenue approach. So we're testing out different things, and certainly we've seen that some of the companies we've been talking to about some of these enterprise sales and some of the integration work we want to do, I can see them getting a little skittish. And particularly for us, some of the challenges in the fact that in a lot of ways the community space is perceived as this kind of soft, fluffy thing that, first to go on the chopping block when revenues are threatened. So one of the things we're retooling to do right now is actually start to tune the system in a direction that's more about customer retention, because that's important in a challenging climate. It's more about reduced costs on customer service, because that's important if you can do it. And if you can do this both at the same time, great. From a funding perspective, I absolutely think, a big part of the reason we're going that way is entirely from a funding perspective. If you looked at our original plan, our sort of roadmap to revenue was a little further out than it is now, but in starting to test the waters, going back out and talking to some of the VCs, it's clear that they're going to want to see, when we go back out to talk to them, as a company that can say, here's the revenue plan that we have in mind, here are some early success stories that we can point to. They just want to see much more. They're much less willing.
More due diligence and more proving a business model for the Web 2.0 startups.
They're not as willing. They're not at all willing anymore to go off. Hey, look, I've got a bunch of users.
So how do you see the economy playing out in the tech industry? Some people act as if it's immune. Is that the case?
I can't predict the future there. But there's kind of a modern version of Pascal's wager. Back in the old days, Pascal once said, you're better off living a good life, believing in God, even if there is no God, because, hey, you live better anyway. And right now, if you assume the worst, if you assume that there's going to be a great disaster, what would you do differently? And I want to tell people, you work on stuff that matters, because then it matters whether in good times or bad. And I think there's a kind of a great forcing function if you say, wait, this is the only world we've got. We've got to do it right. Let's take these problems seriously. I think it'll lead to successful companies in good times, and in bad times, it's a much more robust strategy for making your efforts count.
Getting back to the economy, what's the mood like? I mean, are you seeing tech entrepreneurs and investors nervous, or do they think that they're immune?
I don't think anyone can be immune from what's going on here, and it certainly affects everybody, and I think everyone's just nervous in general. For the Web 2 community, I think there's still a sense of optimism, though. I think there's a sense that in some ways, the worse the overall economy gets, the more we're going to need innovative products and services, the more people are going to be looking to the next thing, and that's what this community does. So I think there's still a sense that there will be investment. Certainly the sectors that rely more on business-to-business software, people who are selling Web 2.0 into large businesses, are probably a little bit more concerned. But even then, you still have this situation where if budgets are slashed, what are they going to go for? They're going to go for some of these lightweight, easier solutions, which are the kind of things our vendors are offering companies. So again, a lot of, I think, anxiety, but also some glimmers of hope.
All right, thank you very much, Jennifer Polko. We'll leave it on a cheery note there.